All right, so I feel like being a teacher today. I don't know what got into me, but I was just thinking like I remember when my I think it was like my math teacher or something. Honestly, all the teachers just sucked. But like in school, the way that they would teach is like they would give you like a step by step and then go over some examples and like have you try to figure it out and then teach you some more stuff and then try to have you figure it out again, like give you some examples, try to have you work through that problem. So I'm gonna try to like recreate that in a sense, but make it less boring. And this is obviously something that we all enjoy doing, making money, right? So maybe that'll help. Let me try to. Oh yeah, look at that. Wow, this is great. Technology is amazing. I feel like a grandpa, but now you can see my screen. Okay, how big do I need to be? I don't need to be that big. All right, so let me try to give you guys hopefully I don't scratch this video. I'll probably end up just posting it. If it sucks, it sucks. The views will reflect that and the likes will reflect that. But if you guys like this video, make sure to like it, save it for later, do something. I don't know. Yeah. Oh, and by the way, so to get this layout, there's going to be a link in the description. So this is going to give you, I'll link the industry layouts. This is going to tell you each sector, all that stuff. You can scan through individual stocks that way. And then this is going to give you the layout here. So it's going to have the risk calculator, and then, the spots to put your watch list, positions, blah, 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 blah. Right now, things aren't being like as easy. It's kind of challenging, but that just gives me more time to teach you guys stuff. And, you know, yeah, I guess that's it. I don't know where I was going with that. But anyways, so let's start with market conditions because this is very important and a lot of you guys seem to be struggling with that. So market conditions, if we were to take a look at SPY, so we're just going to use SPY as market conditions. You can also use CompQX. You can use this. You can use QQQ. You can use, I think SPY is just honestly the best. Most brokers or platforms, trading platforms, whatever, are going to give you real-time data on this for free. Oh, when you sign up for TC2000, so if you use the link, like there's like a link that I have that signs you up for TC2000, like under my, I don't fucking know, under my account or whatever. Like under me, it gives you a discount, so it's cheaper, but make sure you get gold and real-time US market data. I think real-time US market data is like $9.99 a month or $14.99 a month. I have no idea, but you need real-time US market data. And you don't need the options data, just the real-time US market data. And then you need gold, the gold membership. So yeah, once you have this downloaded, then you'll be able to add like the average daily range, all that stuff, which I do have a tutorial in the doc itself, like linking all the links where you get the layout and everything of how to actually add average daily range. And then one thing I wanted to mention, let's just pull up a random stock, Snap earnings. So to go to that, you right click, edit toolbar, and then you're going to press the plus right here, type to search. You're going to type in next earnings. Click on that, and then you add it there. So the way that I have this set up is I have like a prefix and a suffix. So you do the prefix, you put that little line if you want. I think it just looks clean. And then you type earnings, and then suffix, do the line again. Just make it look clean. You don't have to, but I don't know. I think it looks cool. Yeah, so let's start with market conditions. Market conditions are going to be one of the most important things because if you're trading in a shitty market, you're going to get shitty results. How difficult is that? Like, what are you guys doing? Why are you trading right now? Probably because I'm trading right now. I'm addicted. Not going to lie. Maybe I'm not the best teacher. Whatever. Anyways, so market conditions. When the 10 crosses below the 20, so you have the 10, the 20, the 50, and the 200. These are all going to be on your chart. So these are moving averages. You want to see them all in order, inclining. So we have the purple one going up, the yellow one going up, red one going up, green one going up. You want them to be in that order: purple, yellow, red, green, or 10, 20, 50, 200. And you want them to be going up. If they're going down, there's a problem. You should probably stop. Who's revving their car? Like, that's not necessary. Anyways, so the 10 crosses below the 20. That gives you a red light. That means you should not be trading how I'm going to teach you how to trade. You should not be doing that. Unfortunately, like I said, I'm a little bit addicted and I do end up taking trades. There are some good ones that pop out of nowhere, like ACB. You just have to be a lot more selective. You have to know what you're doing. But I think for a lot of you guys that are just starting out, just don't fucking do it. Just don't trade, please. Like if the 10 is below the 20 and these are declining, just don't trade. You're going to give yourself a headache and you're going to lose money. So I'm saving you guys on that one. But you can see here. So let's say like we're starting to go into this period right now. Who knows if that's actually what's happening? I don't know. But the 10 cross below the 20 here, you stop trading. what happens here? 10 crosses above the 20. If there's setups, you take them and you trade the breakout. You probably wouldn't have gotten much follow through because what happened? The 10 went right back below the 20, and these moving averages are also below the 50. So that was a little sign right there. But sometimes, that could be a little bit challenging. I think just going with the 10 and 20. So like just going with the 10 and 20 alone is going to give you the best. I don't know. Give you the best heads up. So you can see here the 10 crosses above the 20 here. Now this is when you had green light to start trading. And as this was going sideways here, this is when quite a few setups happened. So let me see. That was like, yeah. So we have a firm right here. There's a setup right here. And you can see that played out very, very well. So if we go to SPY, you can see as the market went up, this went up 9.6%. We have stocks like a firm that's set up down there right when the 10 crossed above the 20. We had a lot of setups, and then we had a rally here, which a firm gave us 72% versus SPY giving you 9%. So you can see the individual stocks are going to be better if you know what you're doing. Now, that's where a lot of you guys are struggling, is you have no idea what you're doing. But I'm here to give you the info so that you know what you're doing. So yeah, first things first, market conditions. The 10 should be above the 20 on SPY, and they should both be inclining. Now, the best periods are going to be when the market starts to pull back a little bit like this. They go sideways for a little, go sideways for a little here, sideways for a little here. We got a lot of good ones here. And then sideways for a little here, which just ended up breaking down. So I did attempt a lot of breakouts around here, and I lost, some money, but it wasn't too horrible because as this started to pull back, breakouts didn't work as well. And I started to reduce my risk. You guys probably know that are in my Discord. Obviously, the alerts here were like, oh, I'm like risking 1%, whatever. And now it's like 0.25% to 0.5%. I'm just playing it a lot more defensive than I would regularly. Even on ACB, like I didn't get that much size on it. And this thing went up 50% in a day. So I'm like, damn. But yeah, anyways, so the setup that you want to look for is going to be, let's use a firm for an example. So you're going to look for this setup right here. You know what? We can actually go back another day. So you want a stock that's been relatively strong or has a reason to go up. Now, this one started climbing up, right? So this made, up until this point, from this bottom here, this made 100% move in 6 months. So this doubled. This has been climbing. Has it given you an opportunity, though? Not really. Like maybe one here, but we know market conditions weren't that good. It was pretty choppy. So you probably wouldn't have done anything. But here is where the really good setup happened. So right here, what is this right here? We have a stock that goes straight up. This goes up 75%, pulls back. This pulled back 30%. Then we have not a breakout. We have an EP right here. So this is earnings. Now what happens here is the trend completely flips. It has unexpected good earnings, and it gaps over 6%. So I'm going to show you guys how to trade this thing like a fucking pro. So this gaps up 11%. Now you have market open. You can see that the low of the candle, the little wick, hopefully you can see that. It might be a little bit blurry because of how this screen size is. But you can see the little wick right there. Wait, can you? Is my camera in the way? No. Oh, well, I have bedhead. Whatever. This isn't a fashion show. This is a classroom. Right, guys? So you can see that like the low of the day is really, really low compared to the open price. So it didn't go down much. What you're going to want to do is you're going to want to buy the 1 minute opening range highs. Let me go to a firm. Actually, that's not going to work. It's going to take way too much time. So you buy the 1 minute opening range highs. Now, let me try to give you an example of that. You can buy the 1 minute or the 5 minute highs. I do prefer the 1 minute. I think they act better. Like, I think the stocks that do really good end up just working. This is frozen. End up just working on the 1 minute right away. So if you get stopped out off the 1 minute, you can try again on the 5 minute. You would be risking more, technically, because you already got stopped out once. But let's just say, so right here, we have this stock. So let's pretend that this day right here, right, you can see on the left side. So we have a relatively strong stock. It's been growing, makes a decent move up, pulls back. The whole thing is that it's pulling back. It can either pull back or go sideways. I'll show you one that's sideways after this. That was really good. So it pulls back, it goes down about 30%, whatever. The whole thing is that the trend is flipping here, and there's good unexpected news, which is the earnings. So we have the earnings right there. Now, let's pretend that this candle right here is the 1 minute. So we have the 1 minute here. you would wait for this first 1 minute candle to open. So if you're PST, California, whatever, I don't know what else has PST. I'm not a fucking geographer. Um, you can see right here. So the 1 minute highs, you wait for that first 1 minute candle to form. So now it's 6:31. This candle just closed. The next one opens, takes out this high. I'm buying it right away. Stop loss goes right at the low of day. So to figure out low of day, it's going to tell you right here, 31.27, which is not low of day right now because it looks like it went down lower later in the day. Let's see. Yeah, went down lower later in the day. So like you would have got stopped out if that was 1 minute highs. But yeah, so you buy it right there on the 1 minute highs, and then you set your stop loss at the low day. So this risk calculator would tell you how many shares to buy and where to put your stop loss. So the shares to buy, you can edit. So this says 500 because I'm risking like $500 right now. But just change this to 1% of your account. So if you have a 50K account, this is 500. You can do more, you can do less. But I would say stick to 1% of your account, especially when you're first starting out. If you have a smaller account, it could be a little more, but that's up to you on risk tolerance. So back to the setup. We have a stock that completely trend flips right here. Market conditions start to get better. This is like perfect timing. You're in the right place at the right time. And this is a high average daily range stock. So this is above 5%. You can see 5.64 and market cap is 9.6 billion. I think the ones that perform the best coming off of earnings are below 10 billion. So the ones that completely flip the trend on good news, good earnings, and they actually act right and get follow through are usually ones that are below 10 billion market cap. Now, how true is that? Who knows? I think from my personal experience that I prefer, sub 10 billion. This is right there. So it's like whatever. I think we passed on this earnings trade actually and took the breakout instead, just because market conditions weren't like fully there. But looking back on it, this is a great one. So it's great for an example. But yeah, big move up, pulls back, trend flips. So we have good earnings right here, and pretend this is the 1 minute of this stock right here, or of this day right here. So 1 minute candle forms. It's now 6:31, and then 1 minute highs are taken out. So as soon as the high of this candle is broken, I'm buying it. Stop loss goes right here at the low of day. Now, if you want to know how to calculate that position size, it's going to be, let me add text. How do I add text? It's going to be risk. Why is that? Risk divided by entry minus stop. So this is the formula. Fuck. Font size 12. Let's do 112. Okay, so this is the formula, right? Everyone can see that. This is the formula that you're going to use. So if you don't have this risk calculator, which you should, if you get this program, you're going to have it. So you don't have to worry about that. But if you don't have it for some reason and you're really that poor, you can just use TradingView. I guess, but that's going to be the formula. So risk, let's say your account is $10,000. You're going to risk $100 per trade. So you're going to change this value right here to 100, and you're entering this stock right here. So 31.88 is your entry. I spelled entry wrong. That's great. Good thing I don't have to go to English class or anything like that. So 31.88, and your stop loss, what's the low of this candle? 31.41. 31.41. So this is going to calculate your position size for shares. Now for options, you're just going to put in 1% of your account. But coming out of earnings, I like to just trade shares instead of options because, runs like this last for quite a while. Like, what are you going to do? Buy an expiration date that's, let's see, how long did that last? Yeah, bullshit. You're going to buy an expiration date that's 2 months out? Like, no. Just buy the shares because they have no expiration date and you can get good size and you can make a lot of money. You'll buy the options. I'll show you guys when you'll buy the options, which very, very easy. But yeah, so you'll buy the shares here off the earnings trade. So the trend completely flips. By the way, this is the earnings strategy. That'll help you a lot. I can make a separate video going over just that, but I just want to get this video out to give you guys all the steps and give you the real-time examples after I teach you. So we have that. Boom, buy it. Here's the formula. So now we do parentheses first. Remember PEMDAS or whatever. 31.88 minus 31.41 equals 0.47. So now we do 100 divided by 0.47. That's going to tell us we're buying 212 shares. So, or 212.7. Let's just call it 212. Keep your risk a little bit lower. 212.7. So 212 times 31.88. That's our entry. So you put in on a 10K account, you put in $6,758.56. So you have 67% of your account into the trade while only risking 1%. So you see how that's a magic trick? So you bought this thing real low, and then it goes up 35%. So let's say, well, what you're going to do is you're going to hold this position until it, starts to consolidate, or you can use the same breakout rule. So we'd have 3 to 5 days in. So day 1, day 2, day 3, day 4, day 5. So somewhere in this period, you would sell a portion of that. But anyways, let's just say that you held it for some reason and you started to sell it into this consolidation. You sold like half of it. Either way, you would take your 6,750 times 1.3. You made 30%. So you just made 2K on that. So you just made 20% of your account in a single trade. Most people cannot make 20% in a year. You just made it in a single trade. Now, keeping those gains and actually being in this position, that's where it becomes challenging. So you guys can understand that this is a very simple process, but perfecting it is not so damn simple, right? That's why my Discord is beneficial, and I think that's why you guys enjoy that a lot, because I have the process pretty much perfected, or at least I'm really good at it. And I just give you guys the trades. I'm just like, hey, do this now, go. And you guys listen. Who's calling me from North Carolina? The hell do you want? So after, right? So now that you understand the earnings, you don't really need to go sit there and look through the earnings. You just need to know that this is gapping on good earnings. It could be good news, but I say just stick to good earnings because those are it's way more obvious. It's all right, making more money. Fuck, can't be simpler than that. So this is gapping over 6% on good earnings. I don't even really go and look at the earnings. I'm just like, oh shit, it had earnings and it's gapping. So the news or the reaction to the news is positive, as we can see. It's unexpected and it's causing a complete trend flip. So you can even draw a trend line here and look at that right there. So you can see, boom, this day. Let's take this back. Look at that. Holy shit, guys. The trend is completely flipping. And you're going to buy it off the 1 minute highs, and then you're going to have a really tight stop loss, and you're going to have 60% of your account in that trade, and you're going to hold it for multiple days, and it's going to keep going up. And what's going to happen? It's going to give you another setup. So let's talk about this setup now. This is the setup that you're mainly going to be looking for. These are a lot more common. Earnings obviously comes around during earnings season, but the hell? It's not earnings season all the time. So this is what you're going to see more often. These we can go more in depth on another video. Just comment, be like, hey, I want you to be more in depth on the earnings, or if you have questions about it, leave those so I can be sure to cover that. But this is the setup that you guys all know about. This is the one I talk about all the time. So this is the breakout setup. This is when a stock makes a good move up. So we have about a 45% move up here in a week or so, and then it pulls back to the moving average. So it pulls back to the 10. It can pull back to the 10 and the 20. It can pull back just to the 20, build a range down here, and then break out. Who knows? But for here, it's building a range right here on the 10. I think that's when the best ones are, is when they come out of earnings, they go up like this. They're real hot. They just don't want to cool down. And then they cool down. They build this range here. And what do you notice? So big move up. Stock is going sideways. As it's going sideways, what's happening? This volume is dying out, and these candles are tightening up. This is building a very, very clear range here. Now, I can go to the hourly chart, and thank God it lets me. Dude, why does this keep freezing? Walmart computer. What the hell? And there's a hair on my microphone. I'm getting pissed off here. I need to play Clash Royale and calm down. All right, so this right here, you can see. Let's draw that range a little bit better. So this right here is the breakout. What do you see? Or, well, let me talk more about the range. So this is building a very, very tight range here. And what is happening? So we're getting lower highs and higher lows. This is pinching, right? Can you see me? Boom. This thing is pinching. So it's coming to a pinch, and these candles are getting very, very tight, and the stock is going sideways. It's pulling back to the moving average, and the volume is dying out. This is the setup that you need to pay attention to, and this is the one that we're going to go more in depth on in this video. Like I said, the other one, just let me know if you have questions. I'll freaking get to it. Yeah, blah, blah, blah. Anyways, as this starts to break through this range, so you can see this gets really, really tight right here. This candle is very, very thin. This candle is very, very thin as well. Volume is relatively low. As this starts to break out, you'll see that the volume starts to come in here on the hourly. Now, this day actually wasn't a very big volume day. The reason for that is this was a short day. The market closed at 11 on this day. I remember that very vividly because I took that trade. And I was like, I remember buying it. Looking back, I'm like, fucking, what's going on? Is the market closed? And then I checked, I don't know, some sort of like, I think it was like Good Friday, 11/24. I don't know. Look it up. But yeah, so as this starts to break out, you can see that the volume starts to come in. So what you're going to do is you're going to use this the exact same thing that I was telling you about the 1 minute, where the second that 1 minute candle, you can see, like, as long as it's breaking out and it breaks, this previous day's high, which it may or may not have been right off the open. If it didn't right off the open, then just buy it as soon as it breaks this high and set your stop loss low a day. But if not, like if it's just, let's say it opens up here and it starts to go, then you just wait for the first 1 minute candle. You buy it as soon as the 1 minute highs are broken, and then you set your stop loss there. So this one you can actually trade with options. Now, the reason you can trade this with options and not the earnings one is because it's a lot more obvious and we have a clearer price prediction, I guess you can say. So how are we going to figure out where this is going to go? How are we going to figure out where to set our strike price? Blah, 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 blah. So now that you guys know, or we'll figure that out in a second. I'll teach you guys. But now that you guys know the setup, and actually you don't. But now that you guys know the setup, so you can see we have the big move up. The stock goes sideways. It pulls back to this moving average. The candles get very tight. The volume is dying out. And then when it breaks out, the volume starts to come in. And you'll see, that sounds weird. Whatever. Just don't clip that. You guys are weird. The volume starts to come in. And it breaks out. So this is the day that you're buying the breakout. And then this is all the follow through on the rest. So the reason that we're buying this breakout specifically is because the trend has flipped, and this has a reason for it to go higher. It's making more money. The company is growing. Now the market conditions are getting better. This stock is ready to continue higher. Volume is slowly rolling in. Like each day, it's just like, damn, like this is setting volume records. Like there's a lot of money flowing through this. This has reason to go up. This was in the tech sector, which at the time, tech was a very good sector, which I'll show you guys in a second. But yeah, so the reason that you buy this breakout, or the reason that you buy this with shares, is because you would hold these shares all the way here. It never closed under the 10. So to sell the position, let's say this one, we can go back to this one. To sell the position, you're going to wait until it closes under the 10. So you buy the shares, you have them. Shares don't expire, they don't have theta, so you can hold them as long as you want, as long as the stock acts right. So you have all your shares. Now here, what you're going to do is you're going to buy the breakout with options. So you're adding to the position. Now your strike price, this is breaking out on Friday. So your strike price has to be next Friday, because you're not going to do 0 DTE. Like, what the hell are you doing? You're going to buy this for next Friday. So that gives you 1, 2, 3, 4, 5, 6 days. So you have 6 days until they expire, because you have until next Friday. This is next Friday right there, and it closes very, very high. So let me show you. How are you going to figure out how high to set your strike price on this? Well, what you're going to do is you're going to take average daily range, and you're going to multiply that by how many days you have left. So to keep this simple, we're going to call it 5, because you always want to be a little under. You'd rather be under than over, especially if your contracts are, getting close to expiration. So we're going to do 5 times, this is 6 days. Let's call it 5. So 5 times 5, why did I try to use my calculator? It's embarrassing. So 5 times 5 is 25. What happened to this stock? It made a 43% move. So if you wanted to get even crazier, you could do 5.6 times 6. So let's say, now we need a calculator. 5.6 times 6. That is 33.6. So even then, right? Even then, you're above your strike price. So you would have had 33 point something. I don't know if it had point calls. So you would have been like, your calls would have been like 33, 34. I think we had 34s on this, but it ended up closing this day at 3760-ish. So this made about a 44% move, 45% move, and we estimated 33%. So we take average daily range and multiply that by how many days you have left until expiration. Don't buy 1 days, buy like 1 to 2 weeks out if you can. Give yourself at least like 5 to 14 days, let's say. Somewhere in between there, because the breakouts are going to be the most explosive in the first 3 to 5 days. So that's where we can get the options. Now, these are going to be a little bit different. So the earnings, you can see it wasn't that explosive. 1, 2, 3, 4, 5. Like, it's like whatever. Like, who really cares, right? Like, this isn't really that important. Um, but this move is where it's very explosive, and that's where you can make a lot of money. So then you sell your contracts that you have at the end of the day. So you always want to wait until towards the end of the day to sell your contracts because that's usually where they close the highest. So you can see here, highest point of the day was here. Close is, pretty close. Highest point of the day is here. Close is pretty close. Blah, 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 blah. Right? And on the last day, it's like you can't time the top, but you can get pretty fucking close. And after you sell at options, so you just added a shit ton of money to that position and made a shit ton more. What do you have? You still have the shares. And what happens? Where does it close under the 10? Here. Look at that. You didn't time the top. I mean, you're 9.6%, maybe even more. You're 11.2% down from the top. But, anyone else, they're not getting anywhere close to that. They did not trade the stock that you did or trade the stock the way you did. You bought it here. You added to this breakout with options. You caught this burst, the most explosive part of the move. You caught with options, which is going to give you the most money. And you still held your shares all the way to this point. For 2 months, you held your shares. You made 133%. So you doubled the 6K you put in. If you didn't sell any, which isn't really that realistic, you probably would have trimmed some like around here. But you doubled, let's just say, best case scenario, you doubled the 6K you put in. You probably made a few thousand% on options here. So you 10 to 30x your money that you put into options. So 1%. You made another 30%. You could have completely doubled your account on this stock alone. Now, the issue, which is why you guys aren't fucking doubling your accounts on one stock, is because you have no idea where to be and why to be there. Like being in the right place at the right time. So that's where this becomes important. So we go over here, we type in SPY. What do we know? Market conditions, what am I saying? Like, what the hell? Market conditions are horrible. Why? The 10 is below the 20, right? Remember when this video first started? How long ago was that? Damn, it's almost been 30 minutes. Yeah, so that was like 30 minutes ago. I was telling you guys about that. Market conditions are trash. But when the market conditions are good, things start to get good like this. You're going to go through these scanners that I've made for you. So we have 1 week gainer, 1 month gainer, 3 month gainer, 6 month gainer. The main ones that you're going to use are the 6 through the 1 month. So you're going to want to go through all those. And you're going to see that a lot of these stocks in a certain sector are going to start popping up. Then you can go here, sort these by either month to date, quarter to date, year to date, and you can sort the sectors and you'll see what is the best performing sector at the time. So month to date is just today. Like you're obviously not going to go through that. Quarter to date is much longer than today. So this is going to give us a better look at some of the sectors. Year to date is obviously from the start of the year to now. So we can see the top performing sectors: energy, then healthcare, then tech. So tech at the time, coming out of that rally, right? You guys remember here, and then it went sideways for a little. That's where a firm set up, and then, or maybe a firm set up over here. I don't really remember. Somewhere in this period, a firm set up, and then we had this big run up until like about here, I think is around when a firm stopped doing good. But during this period, you can see that tech grew 35%, while energy was kind of, wait, let me get the exact day. 11.2. 11.2. So tech was, going straight up while energy wasn't really doing shit. Obviously, recently, energy's had a big run, but it's only moved 13%. So it's really not that impressive. Tech was the one that was moving the fastest. Healthcare was very similar. So from around this period, it moved up very good. This was 25%. Now tech, this was 35%. So tech was where you wanted to be at the time. And you would see on your scans that a lot of the tech stocks are popping up, and you can see there a lot of them are reporting good unexpected earnings. SMCI, I'll show you real quick. This was one that was sideways for a while. So like I said, those earnings, they can be, coming into a week period where they're pulling back like this. It just had earnings actually, which was shit. It gapped down instead of gapping up. But let's say, let's just get rid of that. Pretend that never happened. Let's say this was going here, and then it gapped up here to like 1,000 or something like that. That would be perfect. That would be perfectly tradable. You'd be buying that, and then you'd wait for it to set up again and give you another breakout setup. That's where you'd go for the options. So this, somewhere along this period. So Here we have the stock going sideways for a long time. Tech stocks, we already knew, were like relatively hot because a lot of them were growing ever so slightly, but they started to really pick up. Then they went sideways for a while. And then we had unexpected good earnings here, right? Which was the tech stocks. And another one. So we had a firm, and then we had this one. There was tons of tech stocks that were just doing really good. This one was going sideways, breaks out on high volume. So if we go to the weekly chart, you can see this is like a perfect breakout setup. Goes sideways, pulls back, volume gets really low. Look at those two candles. Can you see that? Look at those two volume candles. They're like basically non-existent. It's like the lowest it's been in a while. And then it breaks out on that good news, and you can see the volume rolls in. So the same thing here. On this day, you're going to be buying the shares, and you're going to, what was it? I think I made like 200%. You're going to be buying the shares here off like the 1 minute highs or the 5 minute highs. So the same thing, back what I was telling you guys. I was showing you the example. You can do that on either the 1 minute chart or the 5 minute. The 1 minute is going to give you the best entry, but you will have a higher chance of getting stopped out right away. The 5 minute isn't going to give you as good of an entry, but you're probably going to have a little bit better success rate. It won't be as annoying to deal with. But let's just say you buy the 1 minute highs. I do believe on this day on SMCI, it worked very well. And you would have entered somewhere around here. And then this stock, there's another setup right here. We're going to have to go over that one in a different video because this one was really crazy. I traded puts on this and made like 3,000% in like 30, 45 minutes. Actually, I gave that trade to you guys in the Discord too. You guys were like, what the fuck? How'd you know that? I don't know, man. Just figured it out. I'm doing this long enough. Anyways, so you buy the 1 minute highs and you trail this with the 10. So if you didn't notice that this was a setup to short, I actually exited my shares like somewhere around here. But if you just use the 10, you would have exited your shares right here. So you buy the shares here, exit the shares here. And what happens here? Another setup for a breakout. So as this goes sideways, it pulls back to these moving averages. Candles tighten up here. You can see the volume starts to get really low. It's dying out right here. Breaks out. Volume comes in a little bit, starts to get higher, comes in a little bit more, a little bit more. So you set your expiration, 5 to 14 days out. You can see this ends up making a pretty good move, 38%. So average daily range, 8.72. Let's do 8 times 5. Let's say you have a week. 8 times 5 equals 40. So you can expect about a 40% move from this stock in 5 days. It made a 38.6% move. So we're right there. But back to the sectors. So, you guys understand the trades. So those are the two that are going to be the most important, is catching them off the earnings and then catching those breakouts after the earnings, or just catching those breakouts on a strong stock that's going up. The earnings ones are good because what am I saying? The earnings ones are good because you can catch like the start of the move up before it even happens, basically. So you can be in that real early, and then you can ride them out for quite a while. But that is going to be shares only. I just don't think it's worth it to do options on it. I've never really had good luck with it. I've tested it a few times, haven't really tested it too much. Maybe I'll do that in the future, but the earnings ones, you can catch them when the stock really starts to flip around. And then as it's going up on the way up, you'll get a few breakout setups, hopefully. But yeah, you just have to know the sector. You have to be in the right place at the right time. So SPY, obviously the 10 has to be above the 20. And then you have to be in the right sector. So you're going to go through this and see which sector is performing the best. Where is most of the volume flowing? The dollar volume. So if we go here, you can see dollar volume, 2 billion on MSTR. Some of these stocks like that, like you want to see lots of dollar volume flowing into these stocks. You can see some of these have some pretty high dollar volume. No billions yet, but 500 million. Healthcare, we've got something close. So we got almost $1 billion volume. Tech is obviously getting a lot of the money right now, or has been for a while. But some of them are just larger caps, so they're going to have more money flowing anyway. But you can see like a lot of the money just started to flow into tech at this point, and tech just obviously had that huge run. So you need to know that tech is going to be a top performing sector. Now you can filter that by however you want. You can identify that by going through some of these scans, or you can just be in my Discord and I'll just tell you and pretty much do it all for you. I guess that's one way. But yeah, so that's something that you're going to have to like somewhat build market to intuition about. Is that even the right word? I don't know. I don't really know. Anyways, that's something that you guys are going to have to kind of like go through the trading process to actually understand. Like, I can't just sit there and tell you. I'd have to show you like 10, 20 different live examples, which would take me a few months, probably even longer, to be honest. Like, we'd have to catch that period, and I'd have to show you guys, like, maybe we'll do that next time the market, like, flips around. Like, if we get another opportunity like this, I don't know, it's kind of rare that happens, but that's where you can make a shit ton of money coming out of these, like, horrible periods, and then we just get big runs. Maybe I'll try to do that. But yeah, you have to understand, like, so you have to be in the right sector, then you have to be in the right stock in that sector, and then you have to trade the setup. So being in the right sector is one challenge, then being in the right stock in that sector is another challenge, and then trading the right setup is a little bit more challenging. So that's when, like, coming out of the pullback where, like, the earnings, brings it up. That's where that gets very, very challenging. But just a simple breakout is just so much easier, and you guys can still make a shit ton of money. Because, like I said, you can trade them with options where you can get really, really good risk to reward. You guys see I give that stuff out on my Twitter. It's like thousands of percents. Like, it's really fucking crazy. But that would be, you see tech goes up 13%. No other sector went up 13% at this time. And then it went sideways, and you would have got a shit ton of setups here, and you would have caught this move. So this was about a month of just tech stocks going straight up. And then the individual stocks were doing good. So you would notice that tech starts to become a good sector, just based on how much it's gaining percent. And you can see, like, the dollar volume was probably flowing through like crazy. Like, a lot of stocks were probably getting a ton of volume in the tech sector. And then you go here and you filter them out even further. So I just put the 3-month gainer scan on here. So we have 60 for the days, or bars. So 60 bars. And then I filter there. So I click on, so you have all these stocks here. Then you click on the best group, and then you click on the best stocks in that group. So you're going to go through it. You can sort it by dollar volume. You can sort it by average daily range, market cap, industry, whatever you want. But just go through and look, like, all right, which one of these is performing the best? So coming out of that period, what do we have here? MSTR looks like earnings right here. Volume's relatively high. Broke out of this little range right here. What happened? Broke out. You would have bought the shares at the 1-minute highs. Then you would have sold them, like, right here, because it closed under the 10. But what would have happened the day that it closed under the 10? You would have got a perfect setup right there. You can see big move up. Stock goes sideways, pulls back to the moving average. The volume is dying out. You can see very, very thin candles here, right on the moving average, and then breaks out next day on high volume. You buy it as soon as it breaks out there. You have 1, 2, 3, 4, 5 days, 6 days actually, but 5 really, really good days. 6, I mean, yeah, shit, 6 really good days. But let's say this is Monday, so you would have bought them for Friday expiration most likely. And what happened on Friday expiration? Looks like I'm a genius. You sell it right before market closes. Look at that. It's damn near the fucking high of the day. It's a couple pennies off. Like, come on. Can't get better than that. Buy it as soon as it breaks out. Multiply the average daily range by how many days you have until expiration. So you have 9.4. You're expecting this to go. I don't know if the average daily range was 9.4 at that time, but let's just say 9 times 5, 45. You're expecting a 45% move off of that. What do you get? A 53% move. So you're in the money, and you're doing well. And you just made a shit ton of money, and yeah, you would have got out of the stock right there. It would have had a gap up day on Monday, and then pulled right back there, and you wouldn't have out this opportunity. I bought this day too. I remember that. We bought this. Actually, I think we bought a different stock, but one of the crypto stocks like this, and then there's one right here. So there's a setup here. Pulls back. You get the thin candles right there. The volume is dying out, and then it breaks out on high volume, and it didn't have much continuation, but that's when you start to know, like, oh shit, breakouts aren't working that well. You'd see this on quite a few stocks. You start reducing your risk, and then what happens? SPY 10 crosses below the 20, market pulls back. Boom, you just avoided that. So you would have made a shit ton of money during this period, and then you would have started to lose some, and then you get a lot more defensive. So it's not about predicting things, it's about reacting and being in the right place at the right time. I hope that this helped you guys a lot. I don't know. I've made some videos kind of similar, but nothing like. Let me try to get this camera bigger. Nothing like too crazy. I mean, I still have bedhead, whatever. Like I said, not a fashion show. Yeah, but I hope that helped you guys out a lot. If you have any questions, or I don't know, anything that didn't make sense in this video, just let me know. And the tools to this will be linked in the description. I'll also link in the description my Discord if you guys want to join that. Basically do it all for you. So if this is too much work and you're a baby, that's okay. I'll baby you. All right. I will see you guys in the next video. Next video, I'll try to cover earnings more. And then the other video after that, I'll try to show you SMCI, like this big red day, why I took that, why I took puts on that, how I took puts on that, how you can identify how to take puts on that. I see it right now, and it's so damn obvious. Like, that was such a good trade. Anyways, I'll see you guys in the next video. Please be sure to fucking comment something. Like, I need your feedback. Without that, I have no idea what to do. All right, see you guys.